link. That's what we're going to look at. What do you think? So I'm Rocky Outcrop. This is a link technical analysis episode. Thank you so much for joining me. If you would like to hit that subscribe button because you get some value out of these episodes, I would be overjoyed. So thank you so much for tuning in. Just watching this alone is really, really great of you. Let's take a look at Link versus the Bitcoin and Link versus the dollar coin. By the way, if we look at these things, they do at the minute, kind of pan out to be the same sort of concepts conceptually. Obviously the numbers are different, but conceptually it's the same sort of thing. And I really want to get across the concepts to people right now so that you become an independent, self-reliant trader. Of course, I still want you to tune in to here every day, of course. But I want you to become self-reliant too. I want you to. I think that's the most important thing as a trader, is to be self-reliant. I think it's the most valuable skill. So let's start off then. This is the US dollar price, and we can see that there is this line here. And if we look over to the left, that's this 1618 Fibonacci point. Comes in a couple of them, at 735, 720, and then we have a 236 Fibonacci drawn in from the highs that we just had. I believe. I don't actually see the prices having made it up as high as that zero there. Why have I got that there? This is 20. What's going on here? 2-day time frame, maybe. Yeah. But anyway, right, so that'll just do there. So the 236 is coming in at $7.11 there on that one. And I could draw it in body to body and get it slightly differently positioned. But just to know that, we're up here at the $8.28. If we see a cascade downwards in the price and you're looking for it to turn around before we go down to, say, the baseline of the Bollinger Band, for instance, if you wanted it to turn around in a bullish zone and then continue to be bullish thereafter, that's where you'd want to see a turnaround happening at. I wouldn't necessarily say that shorting it from this point right now is the best idea, but it certainly does offer up a fairly low risk management area for us in terms of just identifying where we could have gone wrong at. If the prices do continue to go up to that $9 area, then that's something to be aware of. But we could see it tracing down the way. I think there's opportunities for decent management of your position. If we look here for divergence, we can see that we keep going up here. We've just managed to avoid it here on the 24-hour time frame on the RSI, likewise on the stochastics, and on the DMI as well. So there is still opportunity for more upside potential there. But if we look down the time frames, it's a different story. We've got this bearish divergence showing up. And so far, then, it's what's led to as a sort of double A top here area, just a little sort of kind of V1 here on at 869. Now, some people would be tempted to say this is an inverted head and shoulders, but they'd be wrong because those are reversal patterns, so that wouldn't be a continuation pattern. Other people might be tempted to call it various different things. There's not really any point in doing any of that at the minute. You could say that we've got a sort of symmetrical triangle on the go if you wanted to, I suppose, just looking here at this sort of an idea, and that means that you've got this sort of equal and the equal choice sort of unbiased, statistically even sort of play out. And I suppose if you were to say that there was any sort of bias on them, it'd be towards the top side, I guess, because that's the prior trend. But we could see a move coming off the back of that. And what would it do in terms of the 4-hour time frame? Well, it would take us down towards the lower end of our Bollinger Band, really, essentially. If we look over here and line it up properly with the bottom instead of kind of pissing about. If you do it YouTube style, it takes you down to the 1618. And if you do it textbook style, it takes you down to the lower end of the Bollinger Band, where we could wick around this area before finding some support in amongst it. Looking at our previous lows then, in that case, when would we start saying that we're in a downward trend? Well, going down below, first off, $8.08, and then thereafter $7.99, so $8. Then you start to think, well, hey, in the lower time frames, maybe we are trending down, and maybe a move down to 785 or indeed 730 is on the cards at that point. That would be kind of up to you to talk about or to think about. And again, like I say, same concepts, could draw that in there on the Bitcoin pricing, could make the same debate. Of course, actually, we find that the pricing here would then line up with the 236 up here at 83,000, 84,000, let's call it, actually, Satoshis. If that's what that is, let me know. I think it is. And the bottom end of the Bollinger Band here, moving past the baseline. But we're at the baseline at the minute. You could use this as a relatively low risk management area to sort of take a long at. It'd be dangerous, I suppose, in a sense, though. And we have gone up as high as 97,000. Today, the prices went up to 94,112. So I'm pretty sure the people in the Discord that we're chatting about would have taken some profit up there at that area. Pat on the back, well done. Don't let anybody trade shame you if you didn't ever sell the top. Don't let anybody ever do that to you. your trade, you be your own man or woman when you're trading. Rely on yourself. Again, that's that lesson for you. Don't listen to other people who've got an opinion. Everybody has one. Don't ever let anybody shame you if you took profit anywhere along the way here, really, to be perfectly honest with you. But, if we do see a pullback, then it could come down to 84,000. That would be a significant enough chunk down from where we are right now. For instance, that would be, say, 8%. So, that would be a tradable event if that's what you're looking for. So let's look down the time frames yet again, see with the 1 hour time frame. Well, we've had a bit of a turnaround just here. We have the tightening of the Bollinger Bands. Sure, I'd be looking to see whether or not this continues to trace this or if it moves up towards the top side. It's quite tight at the minute, so you could probably do both as well. So I'd look out for that. But I suppose moves up above 92,000 would maybe see us going back up towards the 93,000. Let's see how it handles the previous highs. The previous highs being, moving up to 93,000 would be going higher than that. And looking for the divergence, well, on this lower time frame aspect, if anything, there was just a bit of the little bearish divergence beforehand on this run up here. As you can see, 1, 2, 3 highs, 1, 2, 3 bearish divergence, and we've come down to as far as not going past our previous low really quite yet. So if you wanted to see the bearish divergence play out, it could absolutely happen, and you'd be looking down at that 88,000 area in terms of that. But maybe you think it's already played out because we're in an upward trend and we've come past the neutral line. So, this is what could be considered to be oversold, and maybe then that would see us going towards the top side. It's hard to say at any given time when you're in a sort of, parabolic all-time highs, blah, blah, blahs, where exactly the prices could be going. So let's just kind of sum up a little bit by then rearranging, if we can, this thing here to accommodate any of the upward. Well, we can't actually really, if we want to include these wicks there as well. So let's not do that then. And we have Fibonacci's already on here, speculative ones and everything else, pointing out where areas would be at 75,000, for instance. If you take it from the lows, the previous real low here before it all kicked off back in November, up to where we have the highs, then you'd be looking at the 236 being at 75,000. If you're doing it from just like over here where we just before we came up, it's sort of the late May June time, then you're looking at 236 coming in at 84,000, and that's kind of what to be looking out for if we have a pullback. All of those could easily offer up relatively low risk, easy to manage trade zones for re-entering for longs, for instance, if you wanted to, or indeed give you clear inflection areas to look out for if you're looking to short it. I'm really just going to leave it at that. I have covered everything over the last wee while. You can watch all the previous videos and you'll get a really good idea about how to be able to make assessments of price action during blue sky breakouts. By the way, somebody said in the comments of a video, it's called blue sky breakout. Yeah, I know. I was saying blue sky thinking because blue sky thinking is a term from another industry entirely, and that's called making a joke, by the way. That's what that is. Lol. Anyway, some people, so, but anyway, over the last few videos, I've covered quite clearly what you would need to be looking at for the whole blue sky breakouts chat, and I think there's a lot of value in that. If you found any value today, let me know what it was in the comments down below. I always like to try and give some. I appreciate the volume's been dropping off, by the way, the whole time, as you would kind of expect. I want to see if the volume comes back in again as the prices are going down, by the way. I think it's worth pointing out that could also be a lot of people taking profit at that point. We'd have to make an assessment of how things were going there, if we saw that coming in, because it could be a cascade. And just kind of the other things that you can look to, I suppose, as well would be, how the Bitcoin dominance chart's going, for instance. We've come down here, we're tracing it towards the downside. That's still happening at the minute, despite the last couple of green candles here in the daily time frame. If we do get a real break away from this, you can see that we're caught in the gravity well of it at the minute. If we do actually get past the event horizon of this thing and go towards the median line, for instance, 65, and move up then towards the 67 area, then of course, we could be looking back towards the 70s and everything else, and I would expect there to be a pullback as well if you could see that happening, as opposed to a rising tide raising all ships. Bearing in mind as well that the Bitcoin price itself is kind of fairly bearish at the minute, so you also there's also considerations about what pairs that you're trading between in terms of managing your risk between trades. Indeed, you could also consider it to be trading all the time. Depends on how you're looking at things. I think I've given some value today. I think I have. Please hit that subscribe button. come back, encourage me, let me know that you're looking for more of this content by hitting that button, and I will oblige. Thanks so much for tuning in. I've been Rocky Outcrop. Tell your friends, www.youtube.com/RockyOutcrop for FOMO-free, greed-free daily crypto technical analysis. And yeah, it's always a bit of fun. We have a laugh, we smile at each other. And to be honest with you, I do consider you all to be my friends as well. So thank you so much. I really do appreciate you spending time with me as we do these episodes. I really, really do. So thank you. Catch you in the next episode. I'll see you next time, friends. Thanks so much for tuning in.